It's Tuesday, March 24th, and this is your Stock Market Daily News Podcast, your quick, data-driven roundup of yesterday's market action and what it means for investors. Let's start with the major indexes. The Dow Jones closed up a strong 1.4%, gaining 631 points to finish near 46,200 in a dramatic turnaround. Both the S&P 500 and the Nasdaq also bounced, with the S&P up 1.1% and the Nasdaq adding 1.4%. That's a sharp rebound after several days of heightened volatility. The headline story driving markets? A diplomatic twist in the Middle East. President Trump announced a delay to potential U.S. strikes against Iranian infrastructure, citing constructive talks. And that sparked an immediate rally across equities, while sending oil prices tumbling from last week's highs. Let's break down 4 impactful stories shaping investor decisions. First, the Dow Jones' surge. The index jumped more than 1,000 points intraday before settling with a sizable 600-point gain. Before Trump's announcement, futures had pointed lower, but optimism over a possible de-escalation in Iran flipped sentiment fast. For investors, this underscores just how sensitive equities are to geopolitical headlines right now and why risk management remains key in volatile environments. Switching to the oil markets, Brent crude plunged from last week's highs near $120 a barrel, falling below $97 before rebounding to about $101 by the close. West Texas Intermediate did the same, dropping as low as $84 before recovering. With roughly 20% of global oil supply passing through the threatened Strait of Hormuz, tensions sent prices up nearly 50% this month, but Monday's diplomatic momentum triggered a much-needed pullback. Lower oil prices should, if they hold, ease inflation pressures and help global equities stabilize. Shifting to crypto, Bitcoin and other digital assets mirrored risky assets by sliding on the initial war headlines, with Bitcoin dipping below $68,000 and briefly falling under $67,000. This risk-off reaction led to over $300 million in liquidations. Interestingly, Bitcoin is now trading more like a tech stock than a safe haven asset, showing just how deeply crypto is integrated with broader market sentiment. On the ETF front, Vanguard is finally joining the junk bond ETF race, filing for its first passive high-yield bond fund after trailing competitors by nearly 20 years. The new fund aims to undercut rivals on fees, reflecting strong recent demand. Junk bonds returned nearly 9% in 2025 and had double-digit gains in 2024. For fixed-income investors, cheaper access to high-yield bonds could make portfolio rebalancing more attractive if equity volatility continues. And finally, an eye on hedge funds. Old West Investment Management's early bullish bet on oil paid off big, with a 31% return so far this year, one of the top hedge fund performances in the energy sector. Their strategy? Doubling down on energy stocks just as geopolitical risks sent oil and energy shares soaring. For institutional investors, it's a reminder that sector positioning ahead of global catalysts can drastically impact returns. To recap, the Dow powered higher on easing war fears, oil pulled back from crisis highs, risk asset correlations remain strong, new low-cost ETF options are coming to bond markets, and sector-focused strategies are paying off for nimble investors. Ahead today, keep an eye on follow-through in the relief rally, oil's next move, and any headlines out of the Middle East or Federal Reserve commentary. Subscribe for daily updates and visit our website for deeper analysis. This is the Stock Market Daily News Podcast. Thanks for listening, and we'll see you tomorrow.